One.
So I wanted to start talking.
Let's do it. You ready?
The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. This is Mark Shanek. I'm CFO of Singer Nelson Charlmers. I want to welcome everyone to our webinar about the overview of the American Recovery and Reinvestment Act COBRA premium reduction provisions. The American Recovery Reinvestment Act of 2009, ARRA, was effective 2/17/09, and as you are all well aware, there's been an overwhelming amount of information distributed from various sources. We recently distributed the long-awaited model notices and basic instructions for completion of the forms. The focus of today's webinar is to help you understand the differences between them and which form to use based on the specific situation. This is the first part of a two-part informational series that will be held. The final regulations have not been issued as yet. They are expected to be released by the end of the month, which will be the basis of our next seminar. The discussion leader today is Lisa Diane of the law firm Kauf, McGuire & Margolis. Also joining the session from Singer Nelson Charlmers are Karen Merce and Doreen, who are two of our senior account executives. I'll now turn over the session to Lisa, and she will take you through the rest of the session. Go ahead, Lisa.
Good afternoon, everyone. Thanks for joining us as we all puzzle through these new requirements. Let's get to our first screen. What we're going to do first today is try to distill all of the main parts of the ARRA COBRA provisions, and we will leave plenty of time after we go through the main issues for questions. So please hold your questions until after we've gone through our presentation, and then we'll open it up for both written questions and questions where you can call in. Sorry, we're just having a few technical difficulties. We will be right with you. Thank you. All right, so how does ARRA affect employer-provided group health benefits? It doesn't change any of the regular requirements of COBRA, the Consolidated Omnibus Budget Reconciliation Act, which we all know is COBRA. It only changes notice requirements and how premiums are paid. So everything else you know about COBRA, that still remains in effect. What ARRA does is to offer certain assistance-eligible individuals, and that's a defined term that we'll explain, help in paying for extended coverage under employer-provided group health insurance plans. Under ARRA, it's when coverage would otherwise be lost due to the involuntary loss of a job. I know lots of you will probably have questions about what is an involuntary loss of job, and let me tell you that that is still being worked out at the IRS and the Department of Labor. We'll answer as many questions as we can today. Basically, under ARRA, assistance-eligible individuals are only going to be required to pay 35% of the premium to continue their health care coverage under COBRA. The remaining 65% of the premium will be reimbursed to the coverage provider through a tax credit. The plans that are covered by these new ARRA provisions are all group health plans sponsored by private sector employers or employee organizations. So that includes union-sponsored programs that are subject to the COBRA rules. Plans that are sponsored by state or local governments are also subject to the new ARRA provisions, as well as federal employee health benefits plans. Any group health insurance that's required by state law to provide comparable continuation coverage, the so-called mini COBRAs by state law, is also included. So our first defined term here is who gets this premium reduction? Who is an assistance-eligible individual? That is going to be an employee or a member of the employee's family, a dependent, who is a qualified beneficiary as a result of an involuntary termination of employment during the period from September 1st, 2008 through December 31st, 2009. So we're both looking back and looking ahead. The person must be eligible for COBRA continuation coverage during that period, September 08 to December 09, and the person must either elect COBRA coverage when it was first offered, or under the provisions of ARRA, there will now be an additional election period provided to certain people. There are income caps on who can receive premium assistance. That's not something that individual employers really need to worry about. We need to provide the notice to everyone regardless of their income caps. But for individuals who are deciding whether or not to continue their insurance through COBRA, if an individual's modified adjusted gross income for the tax year in which the premium assistance is received, so that'll either be 2009, this year, or it can go into 2010 because it's a 9-month period, which I'll explain. If your adjusted gross income exceeds $145,000 or $290,000 for joint filers, then the amount of the premium reduction during the tax year has to be repaid by the individual. For taxpayers whose adjusted gross income is between $125,000 and $145,000 for single filers, or $250,000 and $290,000 for joint filers, the amount of the premium reduction that must be repaid is reduced proportionately. What this means for individuals is they have to take a look at what their gross income is going to be for that year and decide whether or not they want to waive the right to this premium reduction so that they won't have to repay at the end of the year. It does not matter if you find out that your income actually doesn't exceed the limits. Once you waive, you've permanently waived. So that's a decision for individuals to make. I talked about a 9-month period. How long does this premium reduction last? Any AEI, assistance eligible individual, because governments love acronyms, can receive premium reduction assistance for up to 9 months unless, the same with regular COBRA continuation, if an individual becomes eligible for Medicare or becomes eligible under another group health plan, such as an employee who's been terminated finds a new position and has health care under that new employer, or becomes covered by their spouse's employer, then the premium reduction assistance stops. Or when you reach the end of your maximum COBRA coverage period. The premium assistance would obviously stop once you reach the end of your COBRA period. One requirement for individuals, and this is going to be prominently noted on all of the forms that we'll go over today, individuals who are paying the reduced COBRA premium, the 35%, must notify their plans if they become eligible for coverage under another group health plan or under Medicare. Again, that's not the employer's responsibility, that is the individual, because failure to report that can result in a tax penalty to the individual. So all employees will have to notify, and there will be a form provided in our notices that we're going over today, a form for individuals to send in when they become covered under another plan or if they become eligible for Medicare. How are coverage providers going to be reimbursed for this 65% of the premium that we now have to pay? Coverage providers will claim a payroll tax credit. There is now, as of January 2009, there was a revised IRS Form 941, the employer's quarterly federal tax return. And there are 2 lines on that tax return, lines 12 and 12A, where this information will be entered. We won't go into the specifics of the tax forms today, but you should know that it is on the quarterly form. There is a new Form 941. If the credit amount is greater than the payroll taxes that are due, the Secretary of Treasury will reimburse the coverage provider claiming the tax credit for the excess in the same manner as if there were an overpayment of payroll taxes. Who is it who can claim the payroll credit? The payroll tax credit is claimed by the provider. So that can be a multi-employer group health plan, an employer who maintains a group health plan subject to COBRA, or that is self-insured, or an insurer providing coverage under a plan that's not included in one or two. So only these three groups, only these three individuals are allowed to offset the payroll tax. If you are paying into a multi-employer group health plan, it's actually the group health plan that is going to claim the payroll tax credit, even though it's your employees that the premium is being paid for. There will have to be an arrangement between the participants in that multi-employer group health plan and the plan on how this reimbursement is going to go into effect. The thing that is probably on most everyone's mind right now are the notifications that we are required to send out. Who must be notified of these new ARRA provisions? There is a general notice, and that general notice has to be sent to all qualified beneficiaries, whether they are currently enrolled for COBRA coverage or not, if they've had a qualifying event during the period. Again, it's from September 2008 through December 31st of this year, 2009. There is another notice that must go out, a notice of extended COBRA election, that must be sent to any assistance-eligible individual or anyone who could qualify as an assistance-eligible individual if COBRA continuation were in effect, who had a qualifying event at any time between, again, September and this time through the enactment of ARRA, through February 16, 2009, who either did not elect COBRA or who elected it but since has dropped. For example, let's say someone was laid off in a reduction in force mid-September. This person received their regular old-fashioned COBRA forms before ARRA was enacted, and that person decided for whatever reason at that point that they were not going to elect COBRA continuation, either because they didn't think they needed it or they thought that it was too expensive. That person now gets basically a second bite at the apple. They get another 60 days in which to decide, now where they only have to pay 35% of the premium, whether or not they want to elect COBRA coverage. That answers actually our next question, which is, does ARRA extend the COBRA election period? Yes, but only for this limited group of people, only for people who were involuntarily terminated, again, between September and February of this year when ARRA was enacted, who they either didn't elect COBRA or they elected it and they're no longer enrolled. For example, let's say someone did, when they were first laid off, sent back their COBRA paperwork, decided to elect COBRA, their period of unemployment lasted longer than they thought it would, they stopped paying premiums because they were unable to afford it. That person, even though they've dropped COBRA coverage, they get this notice for this second bite at the apple, and they have another 60 days to decide whether or not they want to go back onto COBRA. This notice to this group of people, so we're looking back to September again, has to go out by April 18th, which is why we're holding this seminar today. There's not a lot of time left. So these individuals, there is a deadline in the statute. This group of individuals has to be informed by April 18th, and we're going to be going through the notices and who gets which notice. This special election period, this extra 60 days, the second bite at the apple, this doesn't extend how long someone gets COBRA. Usually COBRA goes for 18 months. It doesn't extend that by itself. It just gives people a second chance to decide that they want to continue under COBRA. The coverage elected under this special election period will begin with the first coverage period beginning on or after the date of the law's enactment, February 17th. So since most plans go on a monthly basis, the first covered period will be beginning of March 1st. So there may be individuals who have already paid full premiums who will be entitled to this reduction in premium. Does the premium reduction, this 35% premium, does this apply to premiums paid for periods of coverage prior to the enactment of ARRA? No. So if someone has been paying 100% of their premiums, there is no premium reduction for anything that was paid prior to February. From March 1st on, yes, but not prior to February. Can employees switch to a different coverage option offered by the plan, whether they are first signing up for COBRA or they are in this group of individuals who has a second chance to elect COBRA? Under ARRA, group health plans are permitted, but they're not required to allow qualified beneficiaries to enroll in different coverage, something different than what they had while they were still employed. However, that changed coverage in order to still meet the premium reduction, be eligible for the premium reduction, the coverage has to be, the premium has to be the same price or lower than the coverage the person had at the time of the qualifying event, so let's say at the time of loss of employment. The different coverage has to also be offered to active employees, not only to former employees. And the different coverage cannot be limited to only dental, vision, counseling, and flexible spending accounts or on-site medical. Now, those dental coverage, counseling, those can all be included in the plan that the person elects to continue under COBRA, but they can't switch to an option that only provides those things. This will be part of the notices that we look at as well. If your plan does allow individuals to change coverage options, the plan has to provide individuals with a notice of this opportunity to change. And individuals will then have 90 days to decide whether or not they want to elect to change their coverage. That will all be explained in the notices as well. What happens if there is an overpayment of the premium in March or April? Certainly there are people who have elected COBRA and either because they don't get a notice on time or have already sent their premium in. If an assistance-eligible individual has paid 100% of the COBRA premium for March or April rather than the 35%, the overpayment can be applied as a credit towards subsequent premiums for future months if that credit can be used up within 180 days. If not, let's say because the person is on the end of their allotment of COBRA continuation, the overpayment has to be reimbursed, and that reimbursement has to be made within 60 days. The Department of Labor is now setting up a procedure to follow to determine what will happen if a premium reduction assistance is denied. For example, let's say someone is denied the premium reduction assistance because the employer says, well, this was not someone who was involuntarily terminated. This is a person who resigned voluntarily from their employment. That person will be allowed to make an appeal to the Department of Labor for private sector employees. The Department of Health and Human Services will handle appeals for government employees. And under ARRA, the departments are required to make a determination within 15 business days of the receipt of a completed request for review. As I said, the Department of Labor is currently developing this process. And there will be an official application form for appeals. It is not yet on the Department of Labor website. We hope that it will be available shortly, and we'll be able to go through that in our next seminar. Now we get to the part I think we've all been waiting for. What is the notification that must be provided? Singer Nelson Charlmers has developed 3 notices that are based upon the model notices recently issued by the Department of Labor. They are very easy to use, step-by-step forms with highlighted sections and instructions that will tell you what to put into each highlighted section. The 3 notices are a general ARRA COBRA notice, a notice in connection with the extended election period, that's that extra 60 days, the second bite at the apple that people get, that certain people get, and then there is also an abbreviated version of the general notice. Okay, who gets the general notice? The general notice will go to anyone with a qualifying event, so anyone who you would normally send a COBRA notice to if the qualifying event occurred on or after September 1st, 2008, and that person has not yet received their COBRA notice. According to the Department of Labor regulations, this general notice must be sent to all qualified beneficiaries, not just to covered employees. Let's take a look at that notice. Okay, you should see up on your screen the model general notice, the full version. And as I just explained, this goes to qualified beneficiaries who have not yet received any election notice, whose qualifying event occurred during the period that begins September 1st, 2008 and ends December 31st. So this is what we're going to use going forward to notify people of their COBRA rights. This will also be used for anyone, for example, who has ended their employment within the past month, who has not yet received their COBRA notice. This goes to those who've already been terminated, and this is what is going to be provided to individuals going forward. The second form that we're going to take a look at is the extended election period notice. This is the notice that goes to the people who get the second bite at the apple, the extra 60 days to elect COBRA. So anyone who experienced a qualifying event beginning in September 1st, 2008, up through the date of enactment of ARRA, February 16th, 2009, who have either not elected COBRA or they elected COBRA and then stopped coverage. They stopped paying the premium. And this is the notice that has to be provided by April 18th. Let's take a look at that notice. Okay, it is very clearly identified at the top as the model notice in connection with extended election periods. This notice is going to go to anyone who ended employment and they have already received a COBRA form, but they are not currently on COBRA continuation of coverage. And I'm sure that this particular form will raise a lot of questions. We'll wait until we've gone through all of them. The last form is merely a short notice, an abbreviated version of the general notice. This is for people who experienced a qualifying event since September, but you've already sent them their COBRA notice, and they've already elected coverage. They've been paying their premiums. This abbreviated notice goes to those individuals so that they can be informed of the premium reduction. And here is the abbreviated general notice. And all of these are available on the website. For additional information, there are several links that we wanted to let you know about. The IRS has very good information on their website, both questions and answers and forms, and an article explaining it. There is also a Department of Labor website that is specific to these new ARRA COBRA provisions. On the Department of Labor website, you can also subscribe to the website so that you will get automatic notifications of any new guidance that's issued. For example, if people had subscribed to this before the model notices were issued, you would have gotten an email, an automatic email from the Department of Labor website telling you the model notices are now available. I'll leave that up on the screen while we're going through questions, and we can open up the lines for questions.
Unmuted.
Sorry, folks, bear with us just a minute so we can get the lines opened up for questions. If we're having a little difficulty just getting the telephone connections in, but if you see on your screen there is a section for questions, you can type questions and that will receive an answer.
Question. Put the question back up.
Okay, is there any specific report that the employer needs to provide to the Department of Labor? The credit that, the only report that needs to be actually provided is the IRS form. The Form 941. That will be the form on which you'll be able to list who the subsidy was provided to, how many employees the subsidy was provided to. That is the only form that's currently available. Okay, so we move on to the next question.
Read out the question.
Since the month of March is already finishing, can individuals who dropped or didn't elect COBRA coverage and now decide to get it under ARRA start their coverage in April 1st, or is the employer mandated to start coverage as of March 1st? The person will have a 60-day period in which to decide to begin coverage, and my understanding is that the coverage does begin March 1st. That is when the premium reduction is available starting March 1st. Our next question is, what about an employee who was terminated after February 16th, who was already sent a continuation notice and has not yet responded? Which notice should apply to that person? That person should get they have already been, here let's get one of our forms up on the screen. that person has already been sent a notice, so they should get the notice for extended election period. Our next question is, if we already sent out our own notifications earlier in March, do we need to resend these official notices? Unfortunately, the answer to that is going to depend upon what was included in the notice that you sent out. You are required to provide all of the same information that is in the model notice. So in that case, we really should take a look at what you sent out to make sure it includes all of the information. Does dental and vision have to be bundled with medical insurance in order to receive 65% for dental and vision? If that is all the person had when they were still employed, my understanding is that that coverage will still qualify for the premium reduction. The only difference is if someone is changing their option, they cannot change to something, to an option that only provides dental and vision.
What about home bills?
Yeah, maybe we can get can we print out the presentation? My technical folks, is that possible?
Absolutely.
Well, we'll be able to get it. We'll get it out to everybody. We'll send an email after the session with all the documentation.
We'll certainly send out the presentation itself as well as the form. The next question is, we gave Aetna and our terminated employees
Are set up
our
for
home billing.
Who pays the 65%. I think in this situation, Aetna is doing the COBRA administration. So in that case, I guess Aetna needs to,
as long as Aetna's collecting the full premium.
but I would make sure that that notices were sent to all the people currently on COBRA.
If you are not, for employers who are not sending out their own COBRA notices or who have an arrangement with their insurance companies to send out their COBRA notices, this is all very new at this point. My suggestion would be to contact your insurance company and make sure that perhaps by providing a list of all of the folks who have had a qualifying event since September 2008, that a new notice is sent out to all of them. Okay. We have another question from someone who said they have already sent letters to all terminated employees who are affected by the subsidized COBRA rates. Again, that is going to depend upon what your letter said. We should do a comparison between your letters and what the official model notices require to make sure that all of the required information has gone out. Our next question is a very good one. We're dealing with this ourselves. How does it get to the Form 941 if you have a payroll provider who does your payroll, such as ADP? A lot of folks are in that situation. You're going to need to contact ADP to find out what mechanism they have set up to put this new information onto the Form 941. Oh, here's a great question that I've actually been waiting for. If we have employees who resigned and received their COBRA notices and declined, do we need to notify them again? Counterintuitively, the answer to this question currently appears to be yes. Even though we know that this is a person, because of their resignation, who would not be eligible for the premium assistance because it requires an involuntary termination, ARRA requires that the new notice be sent to them. It doesn't make a lot of sense, but from some information that we've received from the Department of Labor and the IRS, actually during a seminar that they provided yesterday, it appears that there may be some questions about what exactly is considered to be an involuntary termination. There may be situations in which someone has resigned, but they will still be eligible for the premium reduction. There is not yet official guidance on this. I can tell you that in the seminar that I participated in yesterday with representatives from the Department of Labor and from the IRS, they provided certain hypothetical situations which I would have thought would be a voluntary termination that the participants characterized as involuntary that would be eligible for the premium reduction. And you know, before I give you any of these hypotheticals, let me stress to you that during this seminar yesterday, it was emphasized that these were the presenters' personal opinions at this point, not official IRS policy. That is one of the things that we are looking to have answered in the guidance that we expect to get hopefully within a week from the IRS. For example, one of these situations was, let's say that an employer is going to implement a reduction in force, a RIF, but before they do that, they offer a period of time for people to voluntarily accept buyouts. And the message to these folks is you can accept these increased severance benefits now, take this buyout voluntarily, or if you don't take it, you may be included in the RIF in the future. Now, on its face, that looks like a voluntary resignation. Someone has opted to take the buyout. But from what we heard from the IRS presenters yesterday, that is a situation that may very well be considered to be eligible for the premium reduction. So your safest bet at this point, even though it does involve extra paperwork, is to send out these new notices to anyone who has left employment since September 1st, 2008, not just to those individuals who you know were terminated. The next question, I'm not entirely clear. You've mentioned repayment of premium assistance by eligible individuals. How would this work?
High comp, maybe? The high comp, if they don't waive it?
The suggestion may be if someone who doesn't fit within the income brackets who accepts the premium reduction, they would have to repay that through their income taxes. Please send in another question if that wasn't responsive to what you meant to ask. Again, here, this is our next question is really very similar to the one that I answered just previously. Do notifications go to qualified beneficiaries termed after September 1st, whether the term was involuntary or voluntary? The safest bet, as I said at this point, is to send the new notices to anyone who has lost employment, not just to those whose loss of employment was involuntary. That is what ARRA is requiring at this point. I do recognize that that certainly seems counterintuitive because these folks are going to get notification of the premium reduction, and when they go to fill out the form, they're going to check off that they voluntarily terminated, and automatically that will make them not eligible for the premium reduction. But from the discussion, as I said yesterday, with representatives from the Department of Labor and the IRS, it does appear that there may be some questions in certain circumstances about whether or not a termination was voluntary or involuntary. So the notice, to be on the safe side, yes, the notice should go to everyone. The next question, this is a good question. If someone was terminated for cause and not a layoff, would that person be covered under ARRA? Yes. If anyone who is terminated from employment, just as prior to ARRA was enacted, If that person would normally get a COBRA notice and be eligible to continue coverage under COBRA, yes, that person should get the new notice and would be eligible for the premium reduction.
What if the employee was responsible for 100% of dental and vision because the company did not contribute when they were employed? Are those benefits eligible for the assistance? The answer is yes.
Plan where the employee pays 100% of the cost now.
Yeah, my understanding is that that would be covered.
Right, yeah, that's been our understanding as well. So even if the employer did not pay anything toward the benefits, the employee was paying 100%, they can now take that dental and vision under ARRA and only pay 35%. So they're paying less now than they did while they were an employee.
Exactly.
Which makes no sense, but that's the ruling.
To go back to the purpose of ARRA, it's because of this really widespread economic downturn. The reason why this was enacted in the first place was to try to help people who have difficulty finding new employment continue their health care coverage while they're looking. So it does provide options for people that were not available before because of the economic situation that we're all in. The next question asks whether medical, dental, and vision can be treated separately for ARRA. Now, the only distinction between medical and dental and vision is if your plan provides for the option to change coverage, meaning while you were an active employee, you were covered under one plan, and now that you are deciding to elect continuation coverage under COBRA, your plan allows you to change to another option. The only difference in treatment that ARRA provides for is you cannot now elect to change to a plan that only covers dental and vision.
Okay, the question is,
can you give a summary of when responses and payments would be due for March 9th coverage if we send an extended election period notice? Sure. So the individuals who are getting the model notice in connection with the extended election period, they will have 60 days from the date of the notice to decide whether or not they want to elect COBRA continuation. And just as with a regular election to continue COBRA coverage, they will have 45 days within which to make the first premium payment. That hasn't changed. The next question says, I was told that in order for a terminated employee to receive the 65% dental insurance, it must be bundled with medical insurance to receive the subsidy.
no, I don't think that's correct. I believe it can be a separate election, but we will confirm that.
My understanding from the information we got during yesterday's seminar was if that is what your coverage was when you were an active employee, then you can continue that coverage and receive the subsidy. Again, the only difference, the only distinction that ARRA makes between medical coverage and things like vision and dental is that you cannot elect to change to the limited policy once you've had a qualifying event. Good question. We have our general ARRA notice and the extended notice. The question is, are there any people who would have to get both notices? No. The general notice will go to someone who has not received a COBRA notice before. So let's say someone was terminated within the last month, and that person has not yet received their COBRA notice. They would get the general notice. If someone was terminated 2 months ago, they've hopefully already received their old COBRA notice, those are the only individuals who need to get the model notice in connection with the extended election period. So they've already gotten their first notice. They're getting a new notice now that provides the information about ARRA and the premium reduction, because that obviously wasn't included in their old COBRA notice.
Okay, the next question is, if we are not subject to COBRA, how do we pay the 35% premium for continuing employees and let the carrier know that the individual is on continuation? This is for firms that have less than 20 employees and are not subject to COBRA but are subject to state continuation rules. And everything we've seen states that the insurance company is the entity that has to go for the credit, that you as the employer would only need to remit the 5% premium you're collecting from the qualified beneficiary. However, none of the insurance companies have issued any sort of guidelines or anything along those lines yet. The notices do need to go out to your former employees by April 18th. So at that time, you can start collecting the 35%, and hopefully by then the insurance companies will have a response as to how they are going to administer the subsidy on their end. But again, unlike COBRA groups, the small employers don't have to apply for the credit. It's up to the insurance company.
Our next question is, how long do former employees, those who left prior to February, have to return their ARRA form? Those individuals, that's the 60-day bite at the apple. That's the extra 60-day period that they get to decide, again, whether or not they want to elect. Next question is a great one. This came up in our discussion with the Department of Labor and the IRS yesterday. The question is, for when there is a reduction of working hours below eligibility for coverage, and then the employee is terminated, how will it impact COBRA eligibility? This is a little bit of a twist on what we heard yesterday. And again, let me preface this by again saying these were not official IRS opinions. These were the opinions of the presenters. We are going to have to wait until this additional guidance is sent out, hopefully next week, by the IRS. But the hypotheticals that were discussed yesterday by the IRS individuals were, let's say you have a situation where someone, rather than being laid off, their working hours are reduced so that they become a part-time person and therefore no longer eligible for the employer's health care coverage, but they have not been terminated. From what we heard yesterday, we were told that that person would not be considered to be an eligible for the premium. However, surprisingly, what they did tell us is that if the person who had their hours reduced, if they decided that they could not work at the reduced hours and decided to terminate employment, they would be eligible for the premium reduction. I have yet to see that in writing, so we're really going to have to wait for this additional guidance from the IRS before we can definitively answer that question. But from what the Department of Labor has told us, there needs to be two things that happen for the person to be eligible for the premium reduction. They both must have to have lost their employment, involuntarily lost their employment, and be eligible for COBRA. So if only one of those events happens, for example, in the question that was just presented to us, what if someone's hours are reduced so that they're ineligible for health care? That person may be at that point entitled to COBRA continuation because they have experienced a qualifying event under COBRA, as we've been dealing with for all these years. They will be eligible to continue their insurance under COBRA, but they have not been terminated from employment. So from what we have learned thus far, that person would not be eligible for the premium reduction. The question is, can active employees change their current plan? That will be up to the specifics of your plan. There may be a provision in your health insurance plan that allows individuals, perhaps during an open enrollment period, to change their options. Our next question is, if you use a TPA for the administration and notification of COBRA, will that TPA be responsible to send the notification to the individual, or does the employer send it directly? You should really contact the TPA to find out what processes they've put in place. This is all very new to all of us. The Department of Labor model notices were only sent out very recently. At the very least, I would contact them and make sure that they have a list of all of the individuals who have ended their employment since September 1st, 2008, who are entitled to get notice. And that you ask the question directly to them, are you sending out the notices, to make sure that you're covered. The next question is, if the employer paid for medical, dental, and vision for an employee, and the employee resigned or was terminated and decided to take only dental and vision, does that qualify, or does the employee have to take medical, vision, and dental? Again, this is that situation where if your plan allows terminated employees to change their coverage, they cannot change to a plan that only covers dental and vision and still gets the premium reduction. You may still be able to change your option, but then you would not be eligible for the premium reduction. Anything that folks want to add to that? Okay, I'm sorry, we've gotten a question for clarification. I'm sorry if that was not clear. If someone had medical and waived dental at the time that they were employed, would they be eligible to take dental now through COBRA? No. You would not be, if we've gotten a definitive answer, folks. No. They would not be eligible for the premium reduction if they change to a more expensive plan. If your plan allows a change for a COBRA participant, that change cannot have a more expensive premium than what the person was covered under while they were an active employee.
Right, but I also think the question may have been, if somebody did not have dental, and now with this new election, can they now take the dental? So the answer to that is no. If they were not on the dental plan at the time their employment terminated, they cannot take it now under COBRA.
We have a question about when an employee is out on family and medical leave. If the person is out on leave and due to return in May and decides not to return for the balance, so this is a school employee, for the balance of the school year, and the school has opted not to renew the employee for September, does this person qualify? If the person is eligible for COBRA continuation and they have had an involuntary separation of employment, and my understanding is the option not to renew the employee would count as that, it looks like they would be qualified for the premium reduction. Our next question is, must each member of the family get a separate notice? The ARRA requires that the revised notices go not only to the terminated employee, but to all qualified beneficiaries. We've gotten a lot of questions again about the dental and vision. Hopefully we can make our answer a little clearer. The question is, can a terminated employee may choose to continue dental and vision, but not medical insurance. If someone decides to if their plan allows the person to change their plan, to change their option, once they have elected COBRA, the changed option has to both be no more than the premium they're paying as an active employee, and it also cannot be limited to the dental and vision. If the person was only covered under dental and vision as an active employee, yes, that person can continue that coverage, that limited coverage. It's the only time the dental and vision comes into play is if someone is changing their option from what they received as an active employee to what they're receiving under COBRA.
Lisa, what about if someone elected only dental and vision and they are currently on COBRA for both of those two without the medical? They get a second election period now. They can elect the medical now to go with the dental and the vision, or no?
If the plan allows that option, it looks like that is a possibility. Okay. We'll have to take a look and make sure, but that does, my understanding is that is a possibility.
Okay.
Our next question is, if an employee left in March and received a COBRA notice, what notice do I now send? If someone has left left employment with you since September 1st of 2008, and they have already received their COBRA notice, if they have elected COBRA, if they are currently continuing their coverage through COBRA, you only need to send them the abbreviated notice that informs them of their rights for this premium reduction. If you have sent a COBRA notice to someone and they either did not elect COBRA or they elected COBRA but have since dropped it by not paying their premium, that person gets the extended notice. Our next question is, if someone is currently in an extended coverage period, for example, through divorce or disability through COBRA, can or will this further extend the period? Now, ARRA does not extend the period for which you are eligible for COBRA. The only extension that ARRA provides is for this second bite at the apple, for people who have been notified of their COBRA rights and either decided at that point not to elect or elected and then stopped paying premiums. That is the only extension. Otherwise, there is no, you're not entitled to an extended time on COBRA. It doesn't change the basic rights under COBRA. We have someone who has been very proactive and already spoke to ADP and apparently was told that there is not yet anything in place for the credit on the 941. So the question is, does credit for March have to be placed in the first quarter 941 return? My understanding is that you can put that on to the second quarter 941.
Right, I believe that is the case. And again, we can maybe get clarification from the IRS on that. But I would believe that's the case because I don't think anybody has systems in place yet for getting that credit.
The only thing that we have so far is the revised notice, the revised Form 941. That has been issued by the IRS, and that is the form that you should be using. But it may take folks some time to get up to speed on putting processes in place. This is, as this all has just happened. Our last question, and again, please feel free to call in to either my firm or to Singer Nelson if you have any additional questions. But we are running out of time today. Our last question is a very good one. Are employees who have been terminated for gross misconduct covered by ARRA? The simple answer to that is no. If you are not eligible for COBRA continuation because your termination has been for gross misconduct, then you are not eligible for the premium reduction. However, that's a big if. I have not actually seen a situation in which an employer denied COBRA coverage to an employee because their termination was for gross misconduct. The gross misconduct exception to COBRA rights is very fact-based. So I would certainly get some further advice on the specific factors involved in this termination before making a decision about whether or not to send a COBRA notice to this individual. Thanks very much for everyone for your questions and participating. We apologize that the call-in portion for questions was not up to speed for today. We will certainly have that in place for our next seminar, which you will all be getting invitations to shortly. And we hope to have more information from the IRS and the Department of Labor to provide for you at that time.
Right. I just want to add, this is Karen Merz. If any of our clients have questions, you can email your account manager, or you can contact Lisa, and we'll do our best to get the answers for you as soon as we can. Thanks again, everybody.